All right, everybody. Economic Ninja here, enjoying a nice cup of coffee at the Hampton Inn. Now, if you're new to the channel, don't get too used to these fancy digs, okay? Hampton coffee and Hampton fireplace, okay? So I want to talk about central bank digital currencies, and before you get over, click off of this. If you're into just precious metals, I want you guys to understand what's going on. We're going to be talking about JP Morgan, Goldman Sachs, and all that good stuff. So this is out of Bloomberg today, and I'm going to explain the behind the scenes, because I've been involved in cryptocurrencies since 2017. I read the white paper about the CBDC. Anyway, let's just go here. Goldman Sachs begins trading on the JP Morgan's repo blockchain network. Now, first off, I want to explain that we all, or a lot of us, know that the repo network has been, the Fed's repurchase program has been getting inundated with deposits from banks, okay? Especially when they raised the rate of return that they would be getting. It's just completely flooded it, okay? Which I believe is leading to a much bigger issue in the near term. But this is JP Morgan's repo network. Now, JP Morgan has a very interesting past when it comes to cryptocurrencies. Jamie Dimon has been on in the news many times trying to destroy the price of crypto, trying to demonize it. However, he has said that he does believe in blockchain technology. So JP Morgan has had many patents filed for using blockchain in their current infrastructure. And right now it looks like we are seeing the actual fruits of their labor, and it is going live. So what happened is JP Morgan's blockchain repo network went live, and they partnered up with Goldman. And what happened is this, the first trade for the repurchase agreement happened on June 17th when it swapped a tokenized version of a U.S. Treasury bond for the JP Morgan coin, okay? For those of you that don't understand or know what the JP Morgan coin is, and before you try and invest in it, I wouldn't, personally. That's, hey, it's not investment advice, but it is essentially a tokenized version of the U.S. dollar, okay? A stable coin for all intents and purposes. And technically, this one is not meant for use in normal trade. It is intended for a specific purpose, and this one being repurchase agreements that happen between banks in the middle of the night. When banks are short on liquidity, they have to go into the repurchase market. They put up collateral, and they promise to pay back the next morning to make sure that their books are aligned with government standards. All right, I'm trying to bring this down to the most basic way to understand it, because every day banks do business. They lend money and they get payments back. Well, they are held to a certain reserve requirement. They have to keep a certain amount of dollars in reserve in case of an issue or bank run. Now, we can have all kinds of talks about what the reserve requirements are and are they fair, but that's not the point here, okay? The point is that JP Morgan came out with a token to be able to do this on the blockchain. Now, this is what's really interesting, and I'm going to tie this into, if you don't know what's happening, you're nuts kind of conversation. It said, here's a quote: "We see this as a pivotal moment for the digitization of transactional activity." This is from Matthew McDermott. He's the global head of digital assets for Goldman's Global Markets Division. He said, "Unlike the traditional repo market, the exact amount of time the banks took to complete the transaction was quantifiable. In this case, it was 3 hours and 5 minutes. And I know all the crypto guys are going to be screaming, jumping up and down, because this was done on the Ethereum network. It was an ERC20 token. I already know what you're thinking. But that's beside the point. Knowing the precise time, this is a big step from the current market, as in the way the collateral and cash are interchanged simultaneously and immediately." Now, here's another quote, and I'm going to explain it. He says, "We pay interest per the minute," he said. "We firmly think this will change the nature of the intraday marketplace." So now, that's an excellent point. In the repurchase agreement in the middle of the night, when a bank finds out, oh my goodness, we loaned out more money than we took in, our reserve requirement is not meeting government standards, So we need money. So they go out onto the repo market and they put up there, look, we have this and this collateral, right? Let's say this many treasury bills. Now under Basel III, they might have a little bit of physical gold, and we need some Federal Reserve notes put in our bank account right now. And then we'll pay you back tomorrow morning, but there's an interest rate, right? Well, it's a little bit of a gray area from bank to bank of when those loans took place in the middle of the night and when they were repaid. Well, now because of the blockchain, because it is quantifiable, it is justifiable, it is measurable, right? It is set up between many computers reading this information and recording it. They know down to the second when the agreement was made, when the loan was made, and when it was paid back. So it can not only save a lot of banks a lot of money in overpaying, but it also keeps a solid record of that transaction. The reason why I wanted to talk about, if you don't know what's going on, you're nuts, is there's a lot of people that say, well, this is a Ponzi scheme, and they have no clue what a decentralized or distributed ledger is. They have no clue. And the facts are, I got into Bitcoin and cryptocurrencies a long time ago because I was watching all of the billionaires saying, we're in it, and everybody else is going to be in it. And this is a very pivotal time in the banking industry right now when we are seeing these repurchase agreements being recorded. Now, there's a lot to say about this type of blockchain network because a lot of it can be done in secrecy. The transactions are recorded, but you really don't know. And JP Morgan and Goldman Sachs do not need to divulge that they just loaned so much money to another bank, all right? Those are things that you're not gonna see on the blockchain. But I wanted to bring this point out and give you this story because the adoption is massive, all right? And I'm not joking. If you're in that moment where you're going, this is a Ponzi scheme, well then think of yourself as Katie Couric in 1992 when she's going, email? Nah, that's never gonna work. What's email? And now she's probably yelling at all of her assistants, why didn't they read her email in time? Honestly, think about that kind of change, and that is very real. It honestly does not bug me that people don't like cryptocurrencies and blockchain because that just means it's more for people like myself to buy up. And I know a lot of you right now are grinning and nodding your head because the facts are everybody is going to be on this system, but very few people will enjoy the benefits of owning your own, like let's say Bitcoin. Pretty soon it won't be open to you. You'll think you'll own it, but you'll just own a digitized version of it. And I know some of you are shaking your heads. You're going, well, I thought it was digital. No, I'm talking about a derivative of Bitcoin. But anyway, I'd love to hear your thoughts, even if they're bad. I love seeing all those comments in the comment section below. But I want to bring you that information. Things are changing rapidly. And you know, last thing I'll leave you with, and if you stayed with me this long, you deserve this little nugget. A lot of people ask me about the CBDC, the central bank digital currency, and if it's something they should invest in. I will give you this advice. CBDC is worth $1. So what do you think? That's really the only way I can put it. It's not financial advice. You're probably going, well, that's not advice at all. That's actually nothing. But it's a digital version of the dollar. So I'll leave you with that. I won't be buying it. All right, guys. That being said, I thank you for your time. The Economic Ninja is out.